Well, good morning. Jagender Rana here. Topic for our discussion today is insurance for large residential complexes. Insurance for large residential complexes. So for centuries, mankind has adopted living in ghettoized manner. Earlier in cities like Mumbai, Kolkata, etc., the concept of multi-housing in single premises started in the forms of chawls. Chawls, having small houses consisting of one or two rooms with kitchen and facilities of common bath, toilet, etc. Subsequently, new modern single-storied premises housing larger self-contained apartments, normally consisting of two or more bedrooms, dining and living spaces with kitchen, bath, toilet, etc. came in vogue. It is in modern times that number of multi-storied building and individual bungalows are combination of both in residential complexes are coming up in the large numbers everywhere. So such complexes with modern facilities and features are increasing day by day in almost all the cities and towns. The facilities features include swimming pool, gym, club, houses with many sports and recreational activities, libraries, gardens and lawns, and landscape in substantial parts of open space besides normal requirements such as security system, water storage and supply system, elevators, electricity in common areas, generators, garbage treatment plants, cable TV and network equipment, etc. Also in the complexes, civil structure in large parts are constructed such as roads, boundaries, parking lots, both underground and overground, office premises for residential committees, community hall of functions, premises for housing pumps, generator, mini market stores, ATM, doctor's chamber, and many facilities described for the benefit of residents. There is another important aspect of such residential complexes, which is that large number of manpower is employed in various capacities, such as security, maintenance, electricians, plumbers, gardeners, office staff, sports and swimming pool trainers, etc. So, for the management of various aspects of common interest of the residents, cooperative societies or apartment associations are formed, as is also required under the relevant statutes. So, these bodies are run by the managing committee elected by members and govern the system in terms of bylaws framed. The substantial monetary involvement is there in common assets and facilities in modern residential complexes. The managing committee are compelled to consider financial protection against various hazards and thus the need for insurance coverage arises. In some of the complexes, the management also considers insuring residential apartment bungalows in collective manner as providing benefits to the members. So, for obtaining proper and adequate cover against various contingencies, as also to understand legal implications of various issues involved in such residential complexes, the following crucial aspects need to be taken into the consideration. Insurable interest, insurable assets and its exposure to hazards, fixing of sum insured vis-a-vis basis of indemnity, arranging insurance with selection of appropriate cover, optional add-on covers and legal liability. So insurable interest is an important aspect when the insurance is arranged by a housing cooperative society of apartment owners association. In any housing complex, there are large number of residential flats, bungalows, as also the substantial quantum of common assets which are for common benefits of the members. So while for each residential flat bungalow there is an individual owner, or in some cases joint owners, corporate entities, etc. In the case of common properties, all members are collective owners. So for arranging insurance for common properties, the societies or associations can acquire insurable interest by obtaining an appropriate resolution in the AGM, and they can take the policies in their own name. However, if the societies or associations willing to take insurance cover for individual flats, bungalows to provide benefits to members, the question arises whether they have insurable interest in the properties of members of residential complexes. The answer is no. The society or association has no insurable interest in the individual properties, and therefore the society or association cannot take insurance in their name for such properties. However, if the societies or associations are willing to provide insurance cover for properties of all the members in a corrective manner as benefits, they can do so as facilitator, and it can be done in the following manner. Individual consent should be obtained in the form of an agreement. The agreement will not only provide consent from the members to the society or associations to take policy on their behalf, it will also specify certain other important aspects from the society association's point of view. For example, specifying what is the society association is going to provide, its obligations and protection in the event of dispute, valuation of the flats for insurance purposes, etc. In the event of claim, who will handle the claim? Who will receive the claim? That is whether society, association will receive claim and disperse the same to the concerned members, or will the members be responsible to handle the claim with the insurer directly and will receive claim amount in their name? All the relevant claim aspects should be specified in the agreement with members, thereby also getting it incorporated in the claim settlement clause under the policy. So for obtaining policy, it should be decided whether policy is to be taken for by incorporating a schedule consisting names of the owners of respective properties, or in a generalized manner by providing identification numbers of properties and categories on the basis of the particular size, design, etc. Insurance values can be declared on the basis of such categorization of the people. Both the methods have its own advantages and disadvantages. So the policy with the individual name basis will provide specific coverage for respective property owners. However, it will be the responsibility of the society or association to get the names changed under the policy as and when the property is sold or transferred. Then insurable assets and its exposure to hazards. The common assets consist of many properties. Each property should be clearly specified in schedule for insurance purposes. Hazard exposure for each category of the property is different. For example, plinth and foundations, water tanks and swimming pools, gardens, roads, underground cables and pipelines, etc. have less hazards exposure to the fire perils. However, such properties are prone to the perils of earthquakes, floods and cyclone, etc. So by identifying each specific property and its hazard exposure, the insurance arrangement can be taken in such a manner whereby hazard specific cover is taken for respective property as against full coverage for all properties under the policy. So the hazard specific policy will be beneficial from premium saving point of view. Machineries and equipments are susceptible to breakdown risk through fixing of some insured. Basis of indemnity under fire insurance policy in the normal circumstances is on the market value, that is depreciated value of the insured item, but the insured can select such indemnity under reinstatement value clause. So the advantages of having reinstatement value basis is that compensation for loss or damage will be made on the basis of the new value for the old property. However, it is the requirement of the policy that for reinstatement value basis, the sum insured should represent the present day cost of erecting a similar new property at the same place within a specified time. Then arranging insurance with selection of appropriate covers. A standard fire and insurance policy provides cover against 12 named perils, which by and large provide wide cover to properties of any residential complex. Additional perils of earthquake, STFI, flood and cyclone, etc. can be covered. So the insurers can be approached for providing specific perils cover on certain categories of assets such as swimming pools, gardens, roads, underground properties, etc. on the same concept. So for the assets such as pumps, generators, set, garbage treatment plants, major parts of the elevators such as chain pulley and magnet, etc. Machinery background policy, and for any electronic equipment, installed electronic equipment policy can be considered. Burglary insurance for stores, money in safe, transit and fatality insurance covers can be considered for office of the society or association. Optional add-on covers are available. Certain optional add-on covers on the payment of additional premium are available under various policies which can be considered while arranging insurance for various contingencies. As mentioned above, earthquake, flood and storm and terrorism are optional add-on covers under the fire insurance policy. Then insurance against legal liabilities. The societies and associations as employers for engaging various categories of employees are legally liable to make compensation in case of accidental injuries, death or occupational disease in terms of Employees Compensation Act 1923. The Federal Accident Act under common law, whether such employees are employed directly or through contractors on permanent or even on temporary basis. It is common practice that societies and associations engage service providers companies for undertaking all or selected categories of requirements of the residential complexes. Such service provider company appoints and deploys manpower in various fields, such as securities, maintenance, gardening, etc. Although societies or associations do not directly employ workmen, they are legally liable under various statutes as principal employers. So the societies and associations can take cover for liabilities under workmen's compensation insurance policy. Alternatively, they can work out agreement with service provider to take such policies with incorporating the interest of the societies or associations as principal employer. A misconception here also prevails that by covering employees under personal accident insurance policy, employer can mitigate legal liability in the event of accident. But the courts have ruled that personal accident cover is a benefit provided by the employer and cannot be considered towards compensation and therefore awarded separate compensation cover and above personal accident amount. Although not many cases have come to the light where societies associations have faced liability, litigation for loss of life and property damage of visiting third-party entities inside the residential complexes, but with the changing of times where awareness is increasing and also due to the fact that because of large modern residential complexes, the sheer volume of visitors in the complexes have increased substantially. It is prudent to take cover against such possible liabilities under the Public Liability Insurance Policy. Recently, the Insurance Regulatory and Development Authority of India has launched the Bharat Grah Raksha policy from 1st April 2021. That policy is a very systematic and an improvised version of Standard Fire and Special Perils policy. The policy has 14 perils and most of the add-on covers are inbuilt coverage. Policies provided on the reinstatement value basis, and it has the escalation clause also because the value of the house is increasing every day by a set formula decided by the IRDAI. Policy also covers the personal accident coverage and precious items like jewelry, etc. So that policy is very good, and that is mandatory for all the insurance companies from 1st April 2021. That is the improvised version because the coverage is wider. Even the household goods can be covered under the policy. Sum insured is not an issue because the policy will be issued on the reinstatement value basis only. Additional options are personal accident and valuable items, and the policy provides the escalation clause. The value will increase every year. Even if the policy is taken for 1 year, the value will increase every day, and a formula is set for that. Thank you. Thank you very much.